Hey, Happy New Year, everybody. Hope you had a great holiday season and some good New Year's celebrations. As we get into 2025, it's never too early to talk about all the excitement with doing taxes. Yay. I want to teach you guys something. I'm sure a lot of you know this, but maybe some of you don't. But they just rolled out the 2025 tax year tax brackets. Now, this won't affect you doing your taxes in April in the next couple months, but this is, well, it works the same way. The brackets change every year. And so these numbers below are the numbers for 2025. So this dictates the taxes that you will pay in 2026 on 2025's income. And it looks like this. So these brackets all got ratcheted up a little bit for inflation, but what this means is, let's just look at the married filing jointly, for example. If you make between these different buckets over on in the middle here, so on the first 23,850, you're at the 10% rate, so on and so forth. So most folks fall into this, if you make as a married couple more than 96,950, but up to 206,700, you would be paying in 22% taxes. Now the difference though is that we have a progressive graduated rate tax system. So what that means is if you fall into this bucket here, if you're married and you made 180, let's say as a couple, 22%, you're not paying 22% on the full amount. Or if you're single and you made 100 grand, let's say, you're not paying 22% on the entire amount. It's a progressive system. So on the first, in the married example, up to 23,850, you're only paying 10% in taxes. And then from 23,850 up to 96,950, then you're paying 12% on that batch. And then finally up to 206,700, above 96,950, you're paying 22% on that block. So what that means is overall your taxes are not as high as the bracket that you end up falling in. The average weighted is going to be looking at the amount of money and then the other brackets below. So it's always something a little bit lower. But the point in knowing about this is that once you reach these certain thresholds, there's not a lot of incentive, or if the incentive is if you get a second job or you make bonus income or whatever, it's just important to kind of be aware of how much more in taxes you end up paying, because there comes a point where it may not make sense to make a lot of extra money if it kicks you up into that higher bracket, knowing that you're just going to end up paying more taxes on that extra amount of money. So hopefully that makes sense. Also, the standard deductions, they're going up a little bit. If you're married filing jointly, you can write off without itemizing 30 grand and 15 grand if you're single. So hopefully that helps. If you have questions on this, please reach out. Also, I have that great CPA, Jerry Evans. I'm happy to hook you up with her. For those of you that don't know about her and you need a little help and you don't want to use a box to do your software or go to the blockheads at H&R or any of those other companies, I've got a great CPA that I can connect you with. So let me know. Thanks again for watching, and take care.